Hello, welcome to the Austin Police Retirement System Retirement Education Seminar for Group A members. This seminar is for Group A members who were hired on or before December 31st, 2021. If you were hired after December 31st, 2021, you would be looking for the Group B seminar, which is going to be held at a later date. This will also be videoed and put online on our website for you to view at a later time. Today's presentation will focus specifically on retirement benefits available under the Group A plan and will cover the structure of your benefits. If you have a specific question about your specific situation, please reach out to us directly. The Austin Police Retirement System website is ausprs.org. It's an excellent resource for information on everything related to your retirement benefits. On the website, you will find tabs for contacting us, information related to both active and retired members, and under publications, you will find our employee benefits guide, the system statute, and other documents that explain how the Austin Police Retirement System operates. In the upper right corner of our website, you will see a link to Member Direct, which is our secure online member portal. If you go to Member Direct, which can also be accessed directly using the link on the screen, you will have access to our Member Direct portal. This portal contains information related to your personal retirement account and is available for 24/7 access to your benefit information. To access Member Direct, you will need to create an account first. And in order to create an account, you will need a PIN number. If you do not have a Member Direct account and you need a PIN number, you can reach out to us directly and we will provide you with a PIN. When you get that PIN, you will come to this screen and select Enroll, and you will choose your own username and password after entering and verifying some personal information. Once you have an account set up, you can come to this screen and enter in your username and password, and it will take you to our Member Direct portal. Once you are logged into the Member Direct portal, you will see information on the home screen regarding your retirement account. In the top left, you will see your information such as employment status, your group that you belong to, your employer, and your hire date. In the top right, you will see your service credit. Eligibility service credit is used to determine your retirement eligibility. Benefit service is used to calculate your benefit. And then we have proportionate service if you have time at another Texas retirement system. In the center of this section, you will see your member contributions, your regular member contributions that you make as a part of your payroll, and then the longevity contributions as well. So your contribution total will be listed here. At the bottom of this page, there is a request tab where you can see the status of any requests that you've sent us, such as beneficiary changes or applications that you've sent to us. Within Member Direct, under the account summary, you will also see a tab for contact information. Active members can update their phone number and their email address directly in Member Direct. However, you will need to contact APD HR to update your address. They will notify us once you update your address, and our records will update about 2 weeks after you make that change. Throughout your career, there are several important milestones that you will achieve. At 10 years of service, you will become vested. At 20 years of service, you may be eligible to purchase service credit to reach retirement eligibility sooner. 22 years, you may pre-select a survivor annuity, and this is important for those who have a non-legal spouse as a survivor on their annuity. If a member who is eligible to retire were to pass, a legal spouse or a pre-designated survivor can retire on behalf of that member. Otherwise, the active member death benefit would be paid if there is no legal spouse or no pre-designated survivor. At 23 years of service, you'll become eligible for the retirement and drop plans. At 10 years of service, you will become vested. This means that if you leave the department after becoming vested but before reaching retirement eligibility, you will have two options. You can either withdraw your contributions from the system, which would cause you to forfeit your future right to an annuity, or as a vested member, you could leave your contributions with the system, which would allow you to receive a retirement benefit once you meet eligibility requirements down the line. The retirement eligibility for Group A members is 23 years of service, 20 years of service at age 55, or age 62. Eligibility may be reached using proportionate or permissive service credit, but military service credit is not counted for retirement eligibility purposes. When you receive a retirement benefit from the police retirement system, it is calculated using the following formula. Your multiplier, which is 3.2%, your highest average 36 months salary over the last 10 years, times your years of service. The salary does not include base pay or longevity pay. I'm sorry, it only includes base pay and longevity pay and excludes overtime pay and soft pay. So if you are retiring at 23 years of service, your pension would be 73.6% of your final average salary. At 30 years, it'd be 96%. And at 32 years, it'd be 102.4%. We do not have a cap of earning more in pension benefits than your active pay. To help achieve retirement eligibility sooner, you may use proportionate service credits if you have time at another Texas retirement system. Those systems include the Austin Police Retirement System, the City of Austin Employees Retirement System, the El Paso City Pension Fund, the Texas Municipal Retirement System, Texas County and District Retirement System, the Employees State Retirement System, which includes both the judicial systems and the Teachers Retirement System. With most of these systems, you must have funds on account in order to use that time proportionately. However, TMRS and TCDRS do not require you to have funds on account to use that time for proportionate purposes. Those two funds, however, do not recognize APRS and proportionate service. We recognize their time, but they do not recognize ours. If you have proportionate service that isn't included on your member direct screen under the service category, and you think you have service at one of these systems, please contact us and we will reach out to that retirement system and get that time added to your account. So proportionate benefits work in this way. You will receive one pension payment for the amount of time that you do with APRS. And then once you qualify for eligibility with the other system, you would get a benefit from that system as well. You only get paid for us for the amount of time of years that you do with us, but the other system would pay you for theirs once you reach that eligibility. When you retire, you will have several annuity options to choose from. The formula we discussed earlier provided the life annuity benefit, which ceases upon the death of the retiree. If you want to choose to split your pension benefit, take a reduction in your pension benefit, and cover another person, you can do that using a survivor option. The survivor option is a permanent reduction in your benefit, and the person that you choose to elect is also permanent. There is no pop-up provision if your survivor passes away before you. The available survivor options include option 1, the 100% joint and survivor option. That's the largest reduction from the life annuity amount, but provides your survivor with 100% of your benefit upon your death. Option 2 is the 50% joint and survivor option. That's the smallest reduction, but provides your survivor benefit of 50% of what you were receiving. There is a 66 2/3, which is the middle between those two, provides your survivor with 66 2/3% of your benefit. Option 4 is the only option where the retiree's benefit changes if their survivor predeceases them. So in the other options, as a retiree, you stay at that amount that's been calculated for your full life. Under option 4, the joint and two-thirds last survivor, if your survivor predeceases you, then your benefit drops down to 66 and 2/3% of that amount. Option 5 is the 15-year certain in life benefit. This guarantees a survivor payment for 15 years. So if the retiree passes away after 14 years, the survivor would get 1 year of pension payments. You are not required to select a spouse as your survivor. You can put anybody that you want. However, there are certain age restrictions that apply to non-spouse survivors. A spouse survivor doesn't have these, but if it is a non-spouse that you are electing for your survivor, and there is more than a 10-year but less than a 25-year age gap, then you are only allowed the 66 and 2/3 or the 50% joint survivor. If the age gap between you and your survivor is more than 25 years, then you are only allowed to elect the 50% joint survivor. If the age gap between you and your survivor is less than 10 years, then you can choose any of the available options. It's important to understand the difference between an annuity survivor and a death benefit beneficiary. So in the previous slides, we've been discussing your annuity survivor. And the selection for that person is an irrevocable decision that is made at the time of your retirement. The death benefit beneficiary, for both active and retiree death benefits, can and should be updated with any changes to who you would like to elect or the percentages that you would like to give them. If a member passes away while actively employed, the active death benefit is 2 times your contribution balance with a minimum of $10,000. For retirees, we have a $10,000 tax-free death benefit. This benefit would be adjusted if you use proportionate service to qualify for retirement eligibility. And the person that you name as the death benefit can and should be updated. I recommend you come to the system, come into Member Direct, and view those and update those annually. To update your beneficiaries in Member Direct, well, you can view the beneficiaries in Member Direct under the Beneficiaries tab and under Member Information. It will show all your current elections. If you wish to make a change, under the Communications tab and click on Forms, you will complete the Beneficiary Designation form. Each time you update your beneficiaries, even to give us new contact information, a new form must be completed in full. Please remember that APRS does not share beneficiary information with the Deferred Compensation Plan, Empower, or the City of Boston for the 4 times your salary death benefit. Each system maintains separate beneficiary forms, so it's important to update them and review them regularly. We recommend reviewing your beneficiary with each entity at least once per year. Service credit is normally earned through your employment. However, there are other options to purchase additional service credit. Each option has different eligibility rules and costs, but there are several different types. Reinstated forfeited service credit is service credit that you can purchase after withdrawing contributions from a previous period of employment. So if you were hired, left employment, took your contributions, came back to the system, you can reinstate that service credit by putting in contributions plus interest. If you go on a uniform leave of absence or a military leave of absence, and you do not use sick or vacation pay during that time to make contributions to the system, you can purchase that within 5 years of your return from the military leave of absence. Pre-membership military service can be purchased. Up to 24 months of active federal military service can be purchased. Only active duty is eligible for service purchase. Reserve time is not eligible. Reserve service, if your DD 214 reflects it as active time, then we can sell it, but reserve time we cannot. If you were employed after February 1st, 2016, you must complete that purchase at the time of your retirement. If you were hired prior to February 1st, 2016, you can purchase that at any time. Permissive service credit counts towards your benefit and eligibility service. At 20 years of service, you can purchase up to 60 months of permissive service credit to become eligible for retirement. There are a few different types. Type A is the cost to achieve eligibility, and this is the most costly option. Type B just adds to your benefit and adds additional years of service credit to your benefit. It costs less than the Type A. You can defer permissive service credit, the Type A, to help you achieve eligibility. So you can purchase up to 36 months of permissive service credit at 20 years of service and get a delayed annuity. So if you purchased it at 20 years, you purchased the full 36 months, you would defer your receipt of your annuity for that 36 months and start collecting your benefit 3 years later down the line. This significantly reduces the cost of the permissive service credit, but you're not getting a benefit for that 3-year period. Payment methods include personal check, cashier's check, and non-Roth deferred comp or eligible rollover plans, IRS qualified plans. If you're planning on purchasing service credit using a rollover from Empower, please contact Empower to make sure that the funds are non-Roth and that they are eligible for rollover. As I previously mentioned, only active duty is eligible for military service purchase. And you must not have purchased the military service in another proportionate retirement system and be getting credit for that time at another system. Permissive service credit cannot be used for eligibility in the DROP program. You cannot do both permissive service credit and DROP. So you have to choose between those. And all permissive service or all service credit purchases must be completed prior to your retirement or your termination from the system. To estimate a cost for a service purchase, you can log on to Member Direct and go to the Estimated Purchase tab under Member Information. You can choose your service purchase type. You will see in this example that permissive service credit purchases will provide you with a grid so that you can see the cost of the regular and deferred permissive service purchases. In the grid, you will see the cost for purchasing the service based on your selected retirement date. Notice that purchasing 36 months of permissive service purchase has 2 rows in the top. One has 0 for deferred purchase and one has 36. The 36 months is the deferred annuity, and you can see that reflected in the annuity start date. The cost for these purchases and the estimated life annuity benefit are displayed in these rows. To see the survivor benefit options and what that would cost, you need to just go to the Estimate a Benefit tab, and I'll show you how that works in a little bit, but this gives you an idea of what it would do to the life annuity benefit. To move forward with the service purchase, you will navigate to the Forms tab under Communications and complete the Request a Service Purchase application. Military and permissive service credit purchases must be only started within 60 days of your retirement. And for military, that only includes those hired after February 1st, 2016. If you were hired prior to February 1st, 2016, you can purchase military service at any time. But permissive must be done within 60 days of your retirement. Group A members that had 23 years of service credit as of February 17th, 2016 are eligible for the 5-year forward drop program. You may enter the forward drop once you achieve 23 years of service. The forward drop is a plan where you can get a lump sum benefit in addition to your monthly annuity benefit. When you enter into the drop, your retirement benefit calculation is frozen using the survivor annuity options that you choose at forward drop entry. The 5-year forward drop accounts are credited with the monthly annuity that would have been paid to you had you retired during that 60-month period, as well as member contributions and interest. The interest is 5% if you had 23 years as of July 31st, 2015. And if you achieve that after that date, the interest is variable to match the prop account interest. Instead of receiving the monthly payments, they are deposited in the drop account, which gives you a lump sum benefit at the time of retirement. You can remain in the 5-year forward drop for up to 60 months, but you don't have to stay for the full 60 months. You can leave earlier. Just know that when you do leave, the lump sum benefit will be calculated as of the date that you leave. All members are eligible for the 7-year forward drop program. It works a little differently than the 5-year forward drop program. You still have your retirement benefit calculation frozen at the time that you enter the forward drop. Instead of receiving monthly payments, those annuity payments are credited to your drop account. But the 7-year forward drop account does not earn interest and has administrative fees that are applied during the drop program. The fee for the first year is 25%, then it goes to 20% for the second year, 15% for the third year, 10% for the fourth year, and the 5th through 7th years is 5%. Member Direct includes tools that allow you to estimate your pension benefits. You will navigate to the Estimated Benefits tab, and it is automatically displaying your eligibility date. You can edit this date under retirement date to whatever date that you would like the estimate to be run as of, and complete the survivor information to see the survivor options you want on your estimate. You can estimate retirement benefits and forward drop benefits here. If you want to include a service purchase in your estimate, you will first need to go to that service purchase estimate screen and estimate your purchase. Once you have run the service purchase estimate, you will select yes on the benefit options in the estimated benefit tab, and it will provide you with a grid of all the benefit service purchase estimates that you have run. You will select the one that you want included in your retirement benefit estimates, and that will include that in the output for your retirement benefit estimate. Benefit estimates use the same pay information that APRS staff have in our system. So whatever you run in Member Direct is the same information that we would be able to provide you. However, we're happy to provide you with calculations if you want to call and ask us to do that. The benefit estimates do not reflect any future raises. Instead, it utilizes your current pay and projects it forward. The estimates that you receive are gross, meaning they do not include taxes or insurance. We cannot provide you with a net pay estimate, but what is taken from your pension payment is federal income tax and your health insurance premiums. Health insurance information can be obtained through the City of Austin Benefits Division, and tax estimates can be found on the IRS website. APRS staff are prohibited from providing tax advice to our members. If you are divorced and your pension is divided as a part of the divorce, then APRS will require a qualified domestic relations order called a quadro in order to split that benefit for you. The quadro typically provides a formula that defines the portion of your benefit that your ex-spouse is to receive. That's typically a percentage of the benefit accumulated during the marital period. We recommend using our model Quadro, which is available on our website. You can download that, provide that to your attorney. If they want to submit a draft to us prior to filing it with the court, we recommend that. We will have our legal team take a look at it and make sure that we can properly administer that with the way it's written. Once you have your draft approved, you can get it filed by the court and provide us that qualified domestic relations order that has been approved. Once it's approved, we will add it to your account, and any benefit estimates that you run will include that Quadro benefit separation. After retirement, members may participate in the post-retirement option plan, or the PROP. This program allows retirees to maintain a lump sum account with the system. The lump sum can be comprised of a rollover of their drop lump sum or a deferral of part of the monthly pension benefits. Similar to how deferred comp operates now, retired members can defer $250 or more of their pension benefit into the PROP. The deferral amount can be adjusted twice per year, but once you stop deferring, you can never start again. But you can go up and down between $250 and your full annuity twice per year. The prop accounts earn interest, which is determined annually, and that interest is posted on the prop section of our home website. To take a prop distribution, you can take up to 2 prop distributions per year without closing the account. If you need a third prop distribution, you will be required to close the account. Distributions can be put into another tax-qualified retirement plan, such as an IRA, or it can be deposited directly to you in your bank account, the same account that we put your monthly annuity in, we would put your prop distribution in. You must submit the paperwork for prop distribution by the 15th of the month to get a same month payment. And you cannot re-enter the prop once your account is closed. The prop account is subject, like any other IRS qualified retirement plan, to the IRS required minimum distributions. And once you achieve the IRS R&D age, we will communicate with you on the amount that you will have to take annually from that account. All lump sum payments from the system will have an automatic 20% lump sum federal income tax withheld. You may request additional withholding if you'd like, but we will automatically withhold the 10%. If you were under age 50 at the time of retirement and retiring in the year in which you turn age 50 is also considered age 50 for the IRS. If you were under age 50, all lump sum distributions have to be rolled into another tax qualified account until you reach 59 and a half. This is us helping you to avoid a 10% penalty that could be assessed on both your lump sum and your monthly annuity. Once you reach age 59 and a half, then you're able to take direct distributions from your prop account. If you were age 50 or over at the time of retirement, then the IRS provides a public safety exemption for the 10% penalty for lump sum distributions, so you can take a direct distribution at any time. Your annuity is never subject to the penalties regardless of your age. This is only for the lump sum, drop, and prop accounts. Disability retirement is available for members who are unable to perform their duties as a police officer due to physical or mental conditions. The application process requires an extensive board review and medical evaluations that may take a lot of time. If you are approved for an on-duty disability, it is calculated using 20 years of service. If you are approved for an off-duty disability, you must be a vested member to qualify for off-duty disability, so you must have 10 years of service, but that benefit would be calculated using the actual number of service credit years that you have at the time of your approval. If you are approved for a disability, you will be required to complete annual reviews of your continued disability status, and that will continue until you would have otherwise reached retirement eligibility. As previously mentioned, the active member death benefit is 2 times your contributions, and those will be paid to the designated beneficiaries or to your state, whoever you have listed in the beneficiaries tab. Retirees have a death benefit of $10,000 or a proportionate amount if you used proportionate to achieve retirement eligibility. The retiree death benefit is non-taxable. City of Austin also provides a death benefit of $1,000. And again, they have a separate beneficiary form for that. If you have questions about your sick and vacation or your bust out pay, APRS staff are unable to help with those questions. That payment is made with APDHR, so make sure you contact them about that benefit. When you're retired, the IRS has provided a $3,000 tax exclusion for health insurance premiums, which retirees can claim on their personal income tax return. When you are ready to retire, you're going to submit your retirement application through Member Direct. The retirement application can be submitted up to 60 days in advance of your retirement date. If you are purchasing any service credits, before you need to complete the service purchase application before completing your retirement application so that your retirement application takes all of that service credit into account. When you go to complete your retirement application, you will be required to provide us with some information. If you are selecting a spouse as your survivor, we will require a marriage license. We will need Social Security cards for both the retiree and survivor, photo IDs for the retiree and survivor, a check deposit slip or direct deposit authorization from your bank showing which account you want your money to be put in, and that will include both your routing and account number for us to verify. And then if you had a Quadro, we would like a copy of that as well if we don't have one approved already. The retirement application and the forward drop enrollment applications can be found under communications and forms. If you have questions about your individual account or retirement benefits, your individual situation, please do not hesitate to reach out to us. This presentation was geared to give more generalized information, but you can always reach out to us with your personal questions. You can email us at staff@ausprs.org. If you email us, please do not include any sensitive personal information. It is not secure. You can call us. Our phone number is 512-416-7672. Or you can send us a secure message in Member Direct by going to the Message Center and clicking Send a New Message. This is the most secure way to reach us, so that is our preferred method. We're always happy to speak with you directly to review your account information and make sure you have a clear understanding of your retirement benefits. Thank you so much for attending today's seminar, and please do not hesitate to reach out if you need any more information. Thank you.